that being said, what I've done tonight is put together 4 slides that kind of delineates the DCED audit report that everybody receives on an annual basis to review the financial, which is actually given to the state of Pennsylvania to be able to compile the different information that should be for the municipalities throughout the state of Pennsylvania. So I just put these 4 slides. The full document should be available by the end of the week. You guys will be able to disseminate it to the rest of the council members and also to the general public. So the first slide I put here is just basically a recap of the independent auditor's report, basically stating that number 1, that the numbers within the audit report are fairly presented as of and for the year ended December 31st, 2023. The thing I want to point out is these financial statements are in accordance with GAAP. They're in accordance with the regulatory basis of accounting. It's the only thing that's required by the state of Pennsylvania. None of your lenders, none of your financial institutions require GAAP financial statements. They accept these financial statements on the regulatory basis of accounting, and this will be filed with the state, and then the borough will meet their requirements on the regulatory basis of the state of Pennsylvania. But I think one thing we want to take away from the independent auditor's report is that the numbers that are being presented for the year ended December 31st, 2023 are fairly presented and have a boilerplate, unmodified audit report. So what I try to do is, if everybody knows what the DCED audit report looks like, it pages, it runs over, it's kind of a landscape. What I try to do is put everything into, one slide so you can kind of go over the results for the year. So what I did is, I summarized the statement of revenues and expenditures and also the balance sheet. That report is, kind of cumbersome and not very user-friendly, so I try to condense it to the best I can within a couple slides and a couple columns for the year ended December 31st, 2023. Your main fund here is your general fund, and then also you have your special revenue fund. There are 3 funds within the special revenue fund, consisting of your fire fund, your highway liquid fuels fund, and primarily the biggest part of your special revenue fund currently, which will go away eventually, is your American Rescue Plan Act money, which is supposed to end at the current year, 2024. You have your capital projects fund, you have a debt service fund, and then also your other biggest fund you have is a sewer fund. So as you can see, your general fund, revenues, expenditures, what I'm going to point out here is your general fund, the revenues and expenditures are all broken out in the DCED report, so when you get that, so you'll be able to tie back into these numbers on my presentation here. Things that aren't included in the revenues and expenditures that I kind of backed out because it made it look a little bit deceiving is the $800,000 revenue that came in for the tax anticipation note and the repayment of it. So I kind of took those out because the net effect was 0 because they were received and paid back in the same year. So I just wanted to show you the net results of operations for the year. As you can see, your revenues were about $5.3 million, and then your revenues came in at your expenditures came in at about $5.6 million. So your actual net operating loss, based on operations before any kind of transfers over from other funds, is actually almost a negative $300,000 for the year ended December 31st, 2023. Then, if you can see here, you're going to see different transfers in and transfers out from the other funds. So the special revenue fund, you're going to see $150,000 moving over to the general fund for American Rescue Plan Act money. And then also there was a council resolution to move $310,000 from the capital projects fund over to the general fund. So when you move that money over from those 2 columns, the capital projects and the special revenue fund, to make up for that operating deficit within the general fund, you actually had a positive change in the fund balance for the general fund for the year ended December 31st, 2023 of about $200,000. Now what you're going to see here is the 2022 fund balance as what was reported for your prior year DCED. For your prior year DCED, your fund balance was being reported in your general fund as a negative $1 million. Within that negative $1 million is a liability that was being reported related to the Taylor Hospital taxes that were received and were to be credited back to Taylor Hospital. on, current information that we received during the current year, related to what that settlement's, going to look like and what's gonna be credited in the future. We were able to, reduce that amount as of December 31st, 2022, based upon the information that we have. So the actual deficit that was, on your, books as of December 31st, 2022, was about $500,000, compared to, or $469,000 compared to the $1 million so being reflected on the DCD. So this is just a change in the estimate of what the tax settlement was and the future credits that are going to be applied to Taylor Hospital tax bills. So when you take that into effect, the restated amount of fund balance for the general fund as of December 31st, 2023, and you take the positive results of $192,000 for the current year, your fund balance was a negative $277,000 being reflected on the general fund. As you can see, the capital projects fund, that was reduced down to $132,000 after the transfer over to the general fund of that $300,000. The debt service fund still has some monies available related to monies that were allocated for future debt service. And the thing I'd like to point out is we're actually looking at the operations of the borough and the challenges that it has in terms of its expenditures outpacing its revenues on an annual basis. I kind of want to point out the sewer fund. The sewer fund, the rates that were being applied, and especially in 2022 and 2023, were not sufficient to cover the expenses. So if you look at the expenses and the increasing quarterly payments that were being paid to Delphora, the actual rates that were being charged for the sewer fees weren't keeping up. So for this current year, your actual expenditures for the sewer fund were $382,000 more than the revenues for 2023. So the sewer fund had accumulated a deficit of almost $680,000 related to December 31st, 2023. So when I look at this in terms of the general fund has an operating deficit and then the operating deficit from the sewer fund. So those monies in the sewer fund and the general fund deficit combined between the 2 year were being funded with those tax anticipation notes throughout the year, and then they were being repaid, and then the whole cycle happened again in 2024. The new tax anticipation note that was received. So does anybody have any questions about?
I do. First, thanks for getting this done. Appreciate handling some issues, staffing issues, but thank you very much. I would just, because the borough does receive questions about it, when will this be published within the time frame to the DCD so that it can be made available to the public?
I'm hoping by tomorrow,
okay.
Maybe Thursday at the latest.
Okay, perfect. All right, so you discussed that we operated at, I know we had a conversation earlier today. Our excess revenue over expenditure was $261,322. And then you just discussed the issue with the sewer fund. Was the primary issue for running the deficit? I mean, obviously we didn't get the $340 or whatever was owed that year from Taylor Hospital because of that ongoing litigation issue. But was the other primary issue the sewer fund deficit?
That's correct.
Okay. All right.
Yeah, so in the general fund, but my understanding is Taylor did pay their sewer fees.
They did pay, yes, they pay their sewer fees, they just didn't pay the tax bill. Okay. And so I'm looking at 22 for the sewer. It was negative 282, and then 23 was 398, and that's just not charging enough in order to.
Yeah, it's just expenditures outpacing revenues on an annual basis. Basically, for all intents and purposes, even though there are some accruals within this report, everything's basically on the cash basis here. And most of those quarterly payments from Delphora come and are received and paid for the same year.
Is there anything? I mean, we've increased our sewer fees the last 2 years, in 24 and 25, other than increasing sewer fees and looking for ways to cut costs. Is there anything else that we can be doing as a borough to clean up the sewer fund?
I mean, those are the two main things. If you can't, if you raise fees to the extent you can, the only other option is, to cut costs. But all your costs are $1.6 million of the X amount of the 1.8. How many expenditures is all that for?
Okay.
that was the statement of revenues and expenditures for December 31st, 2023. So that's what the ins and the outs. And I kind of talked about a deficit. You know, the deficit in the general fund, you have a deficit in the sewer fund, and what does that mean? Like, what does that mean? All that really means is your liabilities exceed your assets as of December 31st, 2023. So in the case of the general fund as of December 31st, 2023, their biggest assets were they had cash of $557,000, and then they had amounts due from the sewer fund. So in essence, the general fund was funding the sewer fund up here. So you can see on both sides here, you can see general fund is owed $750,000, and then the sewer fund owes the general fund $750,000 on the liability side. And then we have accounts payable there. Those are amounts that are due to vendors at year end, and most of the accounts payable related to December 31st, 2023 are twofold. The first one being there was the fourth quarter Del Cor payment, which is probably creating most of the deficit between the sewer fund and the general fund, and then also the second piece of the tax anticipation of the $300,000 that was taken on December was due as of December 31st, 2023, so we wanted to make sure that was captured as a payable when it became due. And then also we have your tax credits, so these were monies paid by Taylor Hospital, and they were still sitting there and still being credited to your tax bill, so that's a tax liability to the borough as of December 31st, 2023. So when you take these into account, so you're probably thinking once you pay off the accounts payable, and then the new tax anticipation note came in 2024, you were able to satisfy the accounts payable and then have some cash flow for January and February until your tax payments are coming in March of 2024. And then you have your special revenue fund, that's all cash related to your American Rescue Plan Act money. The capital projects fund had some monies that were still available to it. Same thing with the debt service, and then you have the sewer fund, which reflects the deficit situation that had built up over the past couple of years. Is there any questions about this slide?
No.
And then finally, findings and other matters. There's a significant deficiency or a material weakness report, internal control over financial reporting that we're going to be issuing to the borough, very similar to previous years. One, citing that we had to make material adjustments to the financial records of the borough to make them in accordance to be able to report to DCED. We have a finding on bank reconciliations. Bank reconciliations weren't being done on a monthly basis. Number one, it's concerned that I'm receiving timely and accurate financial information as a council member, but number two, I'd be worried if you're not doing your bank reconciliations with this age of fraud, there could be activity on your bank statements, et cetera, that wasn't being identified in a timely basis. Balance sheet account reconciliations were not being done. So basically, a lot of the adjustments that we had to do relate to items that were sitting on the balance sheet. Primarily, they relate to the tax credits or the taxes received in advance and not being reconciled and put in what I say the right bucket, the sewer fund, the general fund, et cetera. So we had to make adjustments for that. And then also segregation of duties. You know, it's very hard to employ proper segregation of duties. Some of the things that I do like is that you have a very active council here in terms of reviewing the financial information. I know you're taking steps to, number one, remedy all of these situations. So that's going to be happening going forward and be able to provide you with timely information as you go out throughout the year and at the end of the year. We're going to be filing the annual financial DCED report with the Department of Community and the Pennsylvania Department of Community and Development. The debt statement were included within the DCED, and the only debt that is sitting on the books, the biggest piece, I think you had a couple payments of the police station coming up for the current year, but the biggest thing sitting out there is the general obligation note for 2021 that was used for the lake dredging and some improvements to, I believe, town hall here, and also there were some leases, biggest one being the fire truck, and there was a police interceptor still sitting on there. There's a statement of capital expenditures, your major capital purchases reported during the year, was some work related to lake stabilization, and then also the police interceptor, for the current year, which, $30,000 of that was financed with the lease. The great thing about, Pennsylvania municipalities or any type of Pennsylvania governments in general, we're able to employ very effective third-party confirmations as it pertains to your revenues. So what we do is we send out revenue confirmations to your tax collector, the recorder of deeds, to Portnoy, and they send us all the information back, and we're able to reconcile those payments from a third party to your books and records. So we were able to successfully do that related to all your major revenue streams. We also do tests and controls performed over your cash disbursements and payrolls. What we'll do is we'll take a sample of expenditures, a sample of payroll, and then what we do is we make sure that they were properly approved, provided to council, that they're proper cancel signatures on checks. And then with the payroll, what we'll do is we'll take a sample of employees and make sure that there's time cards are being recalculated properly, and we had no issues related to that, and everything's in accordance with the whatever collective bargaining agreement it may be, or whatever separate contract. And then also there's various other grants, in addition to ARPA, that the borough gets on an annual basis. So not only are we looking at it, but these grants get pretty beat up by not only us, by the state. So every year on an annual basis, we're looking at stuff, and I know, the state could be a lot pickier than me, but especially as it pertains to liquid fuels. So we're looking at it, the state's looking at it, and then also there's the state pension aid and the volunteer fire relief money. So those are monies that come in during the year, and then they need to be remitted to the third party within the time frame, 30, 60 days, et cetera, related to your pension plans. So we do test all of that, but, I think, based upon my conversations that I've had, with management and with Dane, I think some of these problems have been identified not only this year, but also in prior years by other auditors are gonna be addressed moving forward.
Couple questions. So for the internal controls that you went over, obviously material adjustments are largely related to the bank recs and the balance sheets not being done in a timely fashion. That wasn't news to me today, but it was news to me today that wasn't. It was news to me that wasn't being done in a timely manner when I became finance chair. So we have brought in Brinker Simpson to rectify that, to help us with that process. So I think we have corrected those two issues. So that should not be a problem, hopefully, going forward. But my question is in terms of like the segregation of duties. We have 3 full-time employees in the office, which makes it tough, right? I mean, Danielle handles a lot of our financial transactions just because she's been here the longest. I thought it was 11 years. She told me 13 years today. So what do you have any suggestions, or maybe you can provide us some as to what duties we could segregate? Some guidelines?
Yeah, well, I think in your case here is that, like you said, there's only 3 people when it's hard, and I, in no way, shape, or manner, did I find anything that I consider to be improper or anything done, so I think that should be thrown out.
You should have the checks and balances.
Yeah. And you have the checks and balances with the council reviewing financial reports, et cetera. So, typically what I see at a smaller municipality is, maybe having a third party, maybe a monthly looking at doing the bank reconciliation outside. So, Danielle would still continue to do what she is doing, but then somebody else that's independent of the whole process coming in from the outside and doing the bank rec, or whatever like that, Danielle would go through the bank reconciliation, et cetera. So, there's always a chance, especially when, if there's any kind of cash involved or anything like that, but you do have policies and procedures regarding that as well.
Okay. So my questions. Anybody else have anything?
You need to digest this a little bit.
Yeah, understand.
Yeah.
Okay. All right.
And if you need to ask any questions, just do Trish.
We'll do it. All right. Thank you very much, Carl.
Yeah.
Yep.